Hey, this is Matt coming to you from Boston, Massachusetts, and my question today is about Verizon. It's down about 10% year over year, and its PE is around 10, and I'm wondering if it represents a good value opportunity at this stage where its yield is around 4.75. If it keeps going a little bit lower through the rest of September, is this a good entry point or something to stay away from?
Mike, is this a value stock?
Yeah, I mean, it is a value stock. It could also potentially be what we call a value trap. I mean, this is a company that has a great deal of debt, obviously. They have some legacy businesses that continue to struggle, but they represent, you know, a very decreasing portion of their overall revenues. I'm talking about wireline. I mean, the real issue for them lately has been the fact that their postpaid net adds actually have trailed AT&T, have trailed T-Mobile, and that obviously is a problem. But the good news is we have the 5G rollout. They are probably the best brand in the business. I think the dividend actually does create some buying support for the stock. So actually, if it comes in a little bit more, I wouldn't expect this thing to take off because those problems are going to continue to persist. But 5G will provide a little bit of a tailwind, and I think that the dividend obviously is going to create some level of support for people who are seeking yield.
Value trade or value trap, Jeff Mills?
I think it depends why you're buying it. Mike sort of said what I was going to say in a little bit of a different way, but it's interesting here if you are playing it for dividend and for yield. I think 54 is an interesting price. It's been support for about 3 years. Second quarter results were solid. Guidance was good. So I don't anticipate any violent moves to the downside in the stock. But like Mike said, I'm not convinced it's going to be a home run from a total return perspective, so price appreciation plus dividend. But for a stable dividend play, I do think it's a pretty good entry point.
Guy?
Trap. Remember when I was a kid, we used to play this game, Mousetrap. It was a board game. You put all these things. Mike Coe might remember it. Great game. And you know what? That's what I think this is. I mean, Jeff just said it. It's been basically trending sideways for 3 years. Think about the market we've been in over that time. And, oh, by the way, take a look at what T-Mobile's been able to do over that same period of time. So I don't think you're going to get obliterated being in this name. I just happen to think there are better places to be. And, oh, by the way, good luck up there in Fenway this week.
Oh, you're talking to Matt. Okay, yes, got it.
Yeah, that's who asked the question.
Yeah,
that's who asked. I'm not talking to you. I'm talking to the viewers.
Yes, Matt from Boston. Yeah. All right, okay. From value to growth, our next viewer wants to know about big tech, Amazon.
Hey, this is Justin from Portland, Maine. Fast is my favorite show on TV. Thank you guys for having me. It seems like every day another analyst initiates Amazon as a buy or hikes its price target, the average of which is currently $4,300 roughly. What do you think Amazon has to do to convince investors that it's worthy of these lofty price targets? A split? Thank you.
Jeff, how do you tackle this one for Justin in Portland?
So to answer the specific question, I think it's a time issue right here. You know, they've been underperforming for a long time, but I do think it's part of this quality growth trade that probably does okay in this market, and I think obviously does well over the long term. So it's important to keep that in mind. I think what's been going on lately, some tough comparables from last year, that's clear, but they've also been investing really heavily in physical infrastructure. So when you think about their last investment cycle 5 years ago, that was AWS, a much quicker return. I think investors could see the benefit of that investment much more readily. I think now it's just going to take time for investors to be convinced that what they're doing is the right thing. But I think giving Amazon the benefit of the doubt at this point as a capital allocator, it probably makes sense given their track record. So I think you just stay patient with the stock, but there's definitely room here if you hold it over the long term.
I think there are also two questions in Justin's question, and that is what it should do to grow into a valuation, and then a separate question on stock splits, because these are two separate issues, right, Guy?
You know my view on stock splits, but you know, it doesn't matter my view. The reality is if they were to announce one, you and I both know the stock would go higher, whether it's justified or not, just the way the world works right now, number one. Number two, to answer his question, what do they need to do? I'll give you two answers in my opinion. They need to show margin improvement, which has sort of been stagnating the last couple of quarters. And they also need to see a reacceleration of growth in cloud, which I think they can do. The stock has been basically sideways in a pretty narrow range, 3,000 to 3,400-ish. since last July. I think it breaks out to the upside. But to answer the question specifically, do those two things, and I think you got a stock that's going to be north of $4,000.